Everybody's talking about Charlie Munger's recent purchase of Alibaba shares. But what if I told you that we might be able to find the next Facebook or Alibaba on the Tokyo Stock Exchange? Hey everybody, welcome back to the channel. It's CJ here. And today I want to talk about an article that I read recently that profiled a prominent stock researcher in Japan who focuses mainly on Japanese small caps. This analyst is Teddy Okuyama, and he's 34 years old. He works as a translator full-time, but his side gig is actually what I'm going to talk about today. He writes a Substack newsletter where he investigates a bunch of different Japanese small caps. He actually focuses on a small subsection of the Tokyo Stock Exchange, and it's called Mothers. Now that might sound a little weird, but it's actually an acronym. Mothers stands for the market of high growth and emerging stocks. Now this Mothers section focuses on young companies and newly minted startups that are just now publicly listed. I got really hyped up when I read this article because I have been really interested in learning more about the Japanese markets, especially considering Monish Pabrai has an investment in Shinnikin. And after reading this article, I'm even more motivated to continue looking into Japan. One of the main takeaways from this article is Okuyama's belief that there's a big misconception about the actual state of entrepreneurial affairs in Japan versus what outsiders in the United States, for example, might think of the space. He says there is a burgeoning entrepreneurial ecosystem taking shape in Japan, and the rise of fast-growing startups can be attributed to a dramatic shift in risk appetite in recent years. He also went on to say that a lot of people in the US think Japan's startup space is dead. That's exactly why there are opportunities to find fast-growing, promising startups at discount prices. So I think part of this change actually goes hand in hand with what I discussed in another video about how capitalism is kind of changing in Japan. Historically, startups have been pretty rare in Japan. The best talent are usually kept at companies under basically lifelong terms, which is very common for salarymen in Japan. And capital is typically held very tight-fisted by the management of Japanese companies. Japanese companies are famous for hoarding cash. Okuyama said that in 2018, there was kind of a watershed moment for startups in Japan. The company Mercari IPO'd in 2018. Mercari is a very successful e-commerce company, and he said that the success of this company basically overturned on its head the perception that startups are risky and, not safe for investment. So to me, it's great that the perception of startups seems to be changing in Japan. That seems like it's going to be really healthy for the market and the economy in general. Okuyama followed this up by discussing why outside foreign investors should be interested in the small and mid-cap space in Japan in particular. And this is the part that got me really excited as an investor when I read this article. Basically, we have the opportunity to invest in early to mid-stage startups that ordinarily wouldn't go public much later than they would in the United States, for example. I mentioned Facebook at the beginning of this video, and Facebook's IPO market cap was at about $100 billion. And now, of course, that it has gone up many multiples since then because the company's sitting at around an $850 billion market cap right now. But for most investors early on in Facebook, the vast majority of the wealth was made pre-IPO. So if, say you were a investor in the initial seeding funds or an employee or part of the management team, you've made a lot more wealth than in its time on the public markets. So imagine being able to invest in Facebook before it actually went public. Well, that's kind of the theory here with these Japanese Mothers stocks. Okuyama believes that one of the main reasons for this opportunity is that venture capital in Japan is just way more underdeveloped than in the United States. This leaves small companies with no other option than to raise capital from the public markets. So they list their company, and as investors, this is great news for us because we have the opportunity to pounce on these really small early companies that could potentially become 10 baggers, 50 baggers, 100 baggers. And those are the types of returns that, especially in America, are reserved for venture capitalists or management of the companies or day one employees. So just that idea alone gets me really excited to investigate Japanese companies. Monish Pabrai has recently switched his investing philosophy to only thinking about investing in these long-term compounders. And he's trying to identify these long-term compounders before the rest of the market does. And of course, he has found one in Japan, or so he thinks, in Shinnikin. And in this Mothers section of the Tokyo Stock Exchange, we might find another Shinnikin, another 100 bagger possibly. The difference between these new startups, of course, and Shinnikin is that Shinnikin has something like a 30-year track record, and it has a long history of being a spawner, whereas these startups, of course, they're startups. They don't have long operating histories. So it is a little bit of a different type of investment to look at. However, the opportunity for wealth creation for us as investors remains pretty similar. To me, I don't care where the next 100 bagger comes from, but I do like the stability and the history that Shinnikin offers versus some of these smaller startups. So Okuyama thinks that these small and mid-cap publicly listed startups in Japan is basically like venture capitalism in America, but with more transparency. Because if you can get, translated PDFs, or if you can read Japanese, then we can investigate the financial data for these companies and get all the public information that normally is behind closed doors unless you're in venture capital. Another fascinating insight from this article is how Okuyama described Japan's sort of competitive advantage. He didn't go too in depth into this, but Okuyama said that Japan is relatively immune from overseas competition. He thinks that there are cultural, language, and business custom-based barriers that prevent a lot of competition from overseas. This in turn helps these Japanese companies earn high margins and continue to have relatively high rates of growth, which translates to free cash flow. And I'm of the belief that a company's true worth is based on the future sum of all possible cash flows for the company. He contrasted this with US-based startups, where there's a bunch of competition, both domestic and foreign, and these companies will sometimes spend extreme amounts of money in order to gain a dominant market position. So I think we can infer that based on some business customs in Japan, this type of situation actually doesn't happen as drastically in Japan. He listed some follow-up articles that hopefully will illuminate more about this competitive advantage for these Japanese companies. Another benefit Okuyama sees in investing in these mothers companies is that a lot of the CEOs actually have what he calls a more Western mindset. Some of the CEOs from these companies have business degrees from prestigious schools, or they've worked formally for big American tech firms like Google. So they brought with them a lot of Western style approaches to business. Primarily, he says that disclosures are more transparent than traditional Japanese companies, and that these CEOs are very cash conscious. So they don't actually want to hoard cash. They are very keen to reinvest this cash at high rates of return. So he thinks that there's going to be this blend of both Japanese and American business culture that's going to create a lot of long-term value for shareholders going forward. One insight he gave is that these Japanese companies, as opposed to a lot of larger American companies, are generally debt-free, so they can grow their sales while remaining profitable. The bottom line is that Okuyama strongly believes that looking at these small to mid-cap startups in Japan is going to be a great source of opportunity and potentially wealth for investors going forward. And of course, there are going to be some downsides to this. Chiefly among them, you might not be able to access the data that you need if it's not in Japanese. So we might be able to rely on shoddy translations, but overall, it seems to be really hard to translate Japanese directly into English anyway. So that's one big barrier that we face as foreign investors. Another is that investing in these high growth companies sort of goes against a traditional value style. So what I mean by that is these companies don't have long operating histories, so it's hard to kind of glean from the past what the future may look like. And it's also hard potentially to understand what management is thinking and where they're going in the future, just because the company hasn't been around that long. The way I see it is we basically have to look at these Japanese companies through the lens of both value investing and venture capital. So it also might be really difficult to run a concentrated portfolio with these companies. For example, a lot of venture capitalists will make a lot of small bets, and if they hit one winner, that will pay for the rest of their losses. So it's not that big of a deal if they miss on 99 if they find the next Google, for instance. So despite these potential risks, I think it would be foolish, extremely foolish, to ignore this space in the Japanese markets. If you have a little bit of cash, you can overcome some of this because we could simply pay a translator like Okuyama to translate these financial filings for us. And that way, at least you might be on an even footing from the language barrier perspective. But we still can't ignore all of the other factors that might make investing in these small Japanese startups so difficult. Luckily for us, at least we have the opportunity as individual investors to get the data that we need from public filings. So if you're interested in Japan, definitely check out the Mothers Exchange on the Tokyo Stock Exchange. I'm going to be following Teddy Okuyama very closely from here on out. Please let me know in the comments below if you've found any great resources for looking into Japanese companies, and I'll be sure to keep you updated with any resources that I find as well. If If you liked this video, you may enjoy my video over here where I talk about how capitalism is changing in Japan. Otherwise, please like the video and subscribe to the channel if you want to stay up to date with my future investing videos. I am going to try to cover Japanese companies a lot more in the future. Thank you so much for watching. I really appreciate your time, and I will see you in the next video.